So we appreciate you guys joining here with us every Monday evening, taking time out of your night. We, as you know, in February we covered Nadex spreads, and in March and so far for the month of March we've been talking about Nadex binaries. April we're going to be doing some binaries as well. I just put together the subject matters for the month of May. We'll be kind of splitting that up in May. We'll be covering both binary and spreads. So for those of you that are interested in spreads, keep that in mind. We'll be covering those here in May. Looks like we've got a few more people hopping on here. If anyone has any issues hopping on or with audio or visual as we go through, in the chat section here I posted a link. You can see that in the chat section. If you have any trouble logging in, first thing to do is just log out and log back in. That'll normally fix your problems. Otherwise, I posted some information there on getting in touch directly with GoToMeeting, GoToWebinar, and they can fix your issue on their end, or sometimes if it's an audio issue, they can give you a dial-in number as well to make sure that we've got some audio going. So, okay, let's go ahead and jump in here. Let's knock out our standard disclosures here so we can get rolling. So, as always, trading futures, options, or any financial instrument involves risk and may not be suitable for every investor. Please consider these factors before making any investment decision. This presentation is for educational purposes only and is not a recommendation to buy or sell or a solicitation to buy or sell futures, options, bonds, binaries, Nadex spreads, or securities of any kind. As well as all information and strategies contained herein are property of Apex Investing Institute and may not be shared or distributed to another party without express written permission. Any trading decisions that you make are your sole responsibility, and again, anything presented in this webinar is for informational purposes only. Past performance is not indicative of future results. So, first of all, let's talk about Nadex. Most of you on here are familiar with Nadex, and a lot of you already have live and demo accounts with Nadex. But if you do not have one yet, hop on over to nadex.com, and you can go right here to trading and Nadex, or demo trading platform. And if you don't have a demo account already, go ahead and do this right now. Go ahead and do this while we are about to kick off this webinar. You literally just have to choose a username, first and last name, phone number, and email address. Hit apply. A few minutes later, you'll get a email with a temporary password, and you can log in, change your password, make it whatever you'd like to make it, and be ready to go. Nadex will give you a $25,000 demo trading account. One thing I would suggest when you're choosing your username, try to make it something easy but also something short, because if you're logging in on your mobile phone, Nadex does have a mobile app, it can only handle so many characters. So if you're logging into your demo account on your mobile phone, you do have to type in demo dash, and then whatever your account is, your username is. So if it's too long, it won't go on your won't fit in your mobile platform. So try to keep it simple and short so that you don't have that issue there. Okay. Let's see here. Once you do that, like I said, it'll only take a quick minute, and you can have a demo account set up. Wesley, looks like yeah, Wesley, I see your questions coming through. And you can get the free demo account, and they'll give you a 2-week demo account. If you open a live account with Nadex, you can open a live account with just $100 minimum. Once you have a live account open, if you place just one trade in your live account, whether that be a $80 risk trade or a $3 risk trade, it does not matter. Just place one trade. You can call or email to Nadex, and they will extend your demo account for 1 year. Okay? And you can have your demo account and your live account, and they'll extend your demo account for 1 year. All right? Once you have your demo account, well, also if you're here on the Nadex page, you can go through and you can read information about Nadex, the options that they have, the different markets that they offer, stock indices, Forex, commodities, events, Bitcoin, and so on. But once you get your demo account open, like I said, they will give you a demo account with $25,000 of money to play with, and you can go in, and this is a demo account here. You can go in and you'll be able to demo any of your strategies or systems that you want to try out, get familiar with how the platform works. You can place some orders, without risking live money. The way you can get a handle on things, help you understand how binaries work. You won't be afraid to open the open a contract and place an order because it's not live money, and that's a very important thing to do. Experience can be a great teacher. Experience can be a very expensive teacher when you are trying to gain that education and experience with live money and don't know what you're doing. So definitely get the demo account, play with the demo account, learn how to use the platform, learn how the contracts work. Once you open your account, you go up here to my account. Like I said, when you open the demo account, you'll get an email with a temporary password. You can go here under your settings and password right there and change the password to whatever you like. Okay. So that is where you need to go. Like I said, if you don't have that, go ahead and do that now. Just take you a minute or two. That way you have it while we are on the webinar here. Okay. See here, Kevin. We'll get your question here in just a second. A lot of people ask, okay, this webinar is great. Where can I get some more education? Visit us at apexinvesting.com. If you go to apexinvesting.com, you'll come to this page here. And right here, you'll see Join Free Now. All right, you can click there and create a username and password. It is completely free to create a username and password on the Apex website. No credit card required, anything like that, to be a basic member. The basic membership, once you sign up and create a username and password, you will be able to log in. This will give you access to literally hundreds of hours of education, hundreds of hours of step-by-step training courses, webinars. We have a forum here. If you go to questions, trading question forum, this will take you to our forum here that we have broken down. You'll see we have it broken down from S1, S2, all the way up to S12. Sanity, Stewart, talks a lot about trading psychology, risk-reward management, structure, strategies, different strategies to use for binaries as well as other products, systems, complete step-by-step training courses on all of our systems. Lots of information there. People ask, hey, is this webinar being recorded? Yes. If you go here to the forum, again, questions, trading question forum, right here it says general trading forum. Just hit show or hide. If it's hidden, just hit show. And right here, Apex webinars, you'll see a bunch of different webinars here. Right here we got Nadex platform tutorials. You can watch through these videos. It'll walk you through all the different aspects of the Nadex platform, how to use it. Nadex binary webinars, Nadex spread webinars, how to get started with Nadex, all kind of information there. But right here, newest webinars. This is where all of our newest webinars will be posted. This webinar tonight will be posted in this location either later tonight or by first thing in the morning, and it'll be right here. Okay, if you look last week, the webinar I did for short-term binary strategies is right there. The Monday before, directional, reversal, and scalping with Nadex binaries. And then the Monday before, right here, Nadex webinar Binaries 101. This was a basics of binaries webinar. How do binaries work? What is a binary? Gave you step-by-step examples of different binary contracts, buying and selling, and how they work. So tonight, we're not going to be necessarily covering I know the last couple of weeks I have done a binary basics review to get us kicked off, but I've done that for a couple of weeks now. We're not going to really do a binary basics review tonight. Tonight what we're going to cover is binary strangles and butterflies. We're going to actually talk about trading strategies. We're going to talk about what's the difference of we're going to talk about some terminology. I know that's been a little bit confusing for a couple of people. I've gotten some questions on that. You know, hey, I hear you say the term out of the money binary or in the money binary. What does that mean? We'll kind of go through that a little bit, explain to you a little bit what out of the money, at the money, and in the money binaries are. What are the differences? Why would you want to use a particular one? Then we're going to talk about a couple different strategies. And I've referenced these strategies and showed them to you a little bit over the last couple weeks. We're going to dig into them a little bit more. They're called binary strangles and butterflies. We'll talk about range-bound trading, breakout trading. A lot of you are very interested in the 20-minute binaries that Nadex offers. We're going to talk about how to trade those, how to choose the right one, and how to know the expected move and read and understand market conditions so that you know how to trade them. Okay? So again, we're not going to be covering the binary basics tonight, but for those of you that are new and that may not be that familiar with binary basics, what you would want to do is start where I just showed you here. Go to the apexinvesting.com website, sign up for a free username and password, go to the questions forum, and then right here you can go back and watch the last couple of weeks webinar. Okay, you can start with this one right here from March 3rd. It's about an hour and 15-minute long webinar with slides and PowerPoint showing examples step by step of how binaries work. Okay, so if you're brand new to binaries, don't know what a binary is, not exactly sure how they work, tonight's webinar might be a little fast-paced for you, a little bit over your head, but definitely stay tuned and watch it so you understand, get an idea of what's possible with binaries. Then just go back and watch that so you get down the step-by-step basics. Okay. Let's see here. A couple questions. A lot of your questions will be answered as we go through here, but let me just look here. Justin, I think I got you covered there on the demo account. Kevin, safest option knowing that all options are risky. Kevin's question, what is the safest option knowing that all options are risky? Well, that's actually a good question, and unfortunately that's a perfect question with unfortunately no perfect answer. There is no such thing as the safest option or the safest strategy or system or the safest way to trade. But it's a great question, Kevin, because we're actually going to cover some of that tonight. There's no one single strategy or system that works 100% of the time. You all know that. Some days the market is trending. Some days the market is flat. Some days it's choppy as can be. So you may have an amazing trending strategy, right? Hey, I've got this amazing trending strategy. Works great in trends. Well, just about every single trending system out there will work in a big trend. If the market's trending all day long for 6-7 hours, pretty much any trending strategy or system or indicator out there is going to tell you, hey, the market's trending, right? But, and you swear by that system, you love that system, you've made a ton of money with that system, market trends today, you make a killing, then tomorrow the market's choppy and you lose it all and give it all back because you're using a trending system in a choppy market, or you're using a trending system in a flat market. That just doesn't work that way. That's why you can't get stuck on one system or strategy unless you're only going to trade your trending system on trending days. But do you know ahead of time if it's a trending day? Not always. But can you tell throughout the day? Sure. And that's something that we're going to talk about here, is how to read market conditions and how to be able to read the market and know what strategy or system you should trade that day. Okay? Because, yep, Dave, you just took it out of my mouth, because 70% of the time the markets are not trending. They're normally only trending about 30% of the time. So You need to have, you've heard us say it before, you need to have different plays in your playbook. Can't win a football game by running a Hail Mary every time. You know, you got to have multiple clubs in your golf bag, right? Different tools for different jobs. Um, so let's talk a little bit here about some terms and some lingo and a little bit of review. Again, we're not going to jump into the binary basics so much, but what is an OTM is out of the money. ATM means at the money, and actually that should be ITM for in the money. Okay, so out of the money, at the money, in the money binaries. What are they? How are they priced? How do you find the best opportunities? What is time decay? What is premium? Let's kind of run through some of that here. If you've traded options before, you're familiar with those terms, in the money and out of the money. Okay, now binaries are unique in the fact, and somebody just asked about this. Let's see here. Is short time less risky than long time? To sell a cash secured put on a $6 stock is safer. Money can still be lost, but limit risk. Hang. LW, I can agree and disagree with that. I'll show you some examples of why here in just a second. That's actually a perfect question that'll fit into our Strangle strategy that I'm going to show you at the end here. That has very low risk, but would most likely have a lot higher reward potential than you might have on a stock like that. Okay, and you'll see what I mean here. Binary is unique in the fact that in the money or out of the money depends on whether you are long or short, because one contract can be in the money or out of the money depending on what direction you are going. Now, most binary brokers only offer in the money options. Nadex is the only U.S. regulated exchange which directly accepts retail traders as members that offers both right now. Okay, and you can close before expiration. Now, if you hold a binary to expiration, it has to be in the money to be profitable. So let's start with at the money. Let's start with in the middle. See if you can follow me here. All right, because if you can understand, we're going to talk about at the money, out of the money, and in the money binaries. 3 different types of binaries. If you can wrap your head around this, it'll really help you understand the strategies I'm about to show you, and it'll help you with some of your own strategies and systems that you might want to test out. What is an at the money binary? Okay, let's go ahead and hop over back here to the Nadex platform. All right, to a demo account. Right now, just for example, I have up the Aussie dollar for the 8 p.m. expiration. Okay, so right over here under indicative, you see the indicative is 7887. All right, see this binary right here is 7888. So it's this binary contract, okay, is pretty much right where the market is right now. Correct? You guys see that? So the indicative is 7887. This contract is 7888. It's only one tick off, right? Like, see, this one up here is 7923. This contract's way above where the current market is. That makes sense to everyone? Can I get a yes or no? I want you to follow me there. The indicative is where the Nadex indicative, where the underlying, where the market is now. So the market right now, 7886. So what's the closest binary to where the market is right now? Well, it would be this one, 7888, right? So that's what we call an at the money binary, because this binary strike, okay, 7888, is right at where the market is right now. Does that make sense? So that's an at the money binary, because it's the binary strike price is at where the indicative price is. Okay, and where is this binary priced at right now? 47. So right around 50 bucks. Okay, so those of you that understand binaries know that at expiration, a binary is either worth 0 or 100, correct? Wherever you buy or sell it at, it's worth 0 or 100 at expiration. So, if the market right now, see, we've got 37 minutes to expiration, right? Well, if the market right now is at 7886, and this binary is right around that same price, that's why it's priced around 50 bucks, because it's kind of a 50-50 shot right now, right? We don't know yet. Is it going to expire at 0 value? Is it going to expire at 100 value? Because that contract's right where the market is, so it's kind of like on the fence, 50-50. Does that make sense to everyone? I want to get you a little interactive here, so if you can go ahead and pop in there, yes or no. If anybody doesn't understand that simple part right there, not anything else, we'll get into that, but that simple part right there. Okay, so at the money, all right? Now, so let's look up here. This binary contract right here is at 79.23. Is that at the money, or is it way above? Is that at the market or way above? Right. It's way above. All right. So, what would have to happen for this contract to be an at the money contract? Does the market have to go up, or does the market have to go down? Okay. Got a couple of back and forth answers there. Actually, the market would have to go up, because the market's at 78.87. It would have to go up to 79.23 for that to now be the at the money contract. Does that make sense? Yes, Wesley, exactly. A large upward movement. Okay. So, what do you think we would call this binary up here? It's out of the money, right? Because the market's down here at one level, it's way up here, so it's out of the money. It's way up there. For this binary right here, we can buy it right now for $6. What would have to happen for the value of this binary to go up? What would have to happen for us to buy it at $6 and us be profitable on that? Kevin, a miracle. Probably so. A prayer, big news. Yes, the market would have to go up. Okay? So the market would have to go up. All right? Now I'm going to reverse it on you, and then we're going to go back and put the pieces together. All right, so market's at 7888. This binary right here is at 7883. So it's priced at $88. Well, if we were to buy this binary for 788, the 7883 contract, what are we saying when we buy this? We're saying that this will happen. This is a true statement that we think the Aussie dollar will expire above 7883 by 8 p.m. Correct? So we're saying, yes, I think that by 8 p.m. in 33 minutes here, I think the Aussie dollar will be above 7883. Well, is the Aussie dollar above 7883 right now? Yes, it's already above. So this statement is already true, which means this contract is already what? It's already in the money. Okay? Yes, ITM in the money. So it's already in the money. Technically, it's already a true statement, as long as the statement is still the case at 8 p.m. All right. So we jumped around a little bit there. So I'm going to go back. All right, so if the market's at 7888 and there's a contract around 7888, you can pretty much always know that that contract's going to be priced approximately around what price? If a contract's around where the market is, it's going to be priced around 50 bucks. Now, there's a bid-ask spread in there, depends on if you're going long or short. You know, it might be 40 or it might be 60, but it's approximately 50 bucks because it's almost looking at it as a 50-50 chance. Everybody understand that? Hey, the contract is where the market is. Where is it? It's teetering right there. Well, it's around 50 bucks because we don't know yet. Is it going to be at 8 o'clock worth 0 or worth 100? We don't know because we're right here on the line, so we're 50-50. Okay, now let's look at our in the money right here, 7883. It's already in the money by several ticks, several pips, so it's getting close to being worth 100 bucks already, isn't it? You guys see that? Because that statement is true so far, and it's looking like it might remain true so far, so it's already getting up there to being worth closer to 100 bucks. Okay, so that's why it's called in the money. It has a much higher probability. Okay, you can kind of look at binary prices like a probability. If you took the bid and offer and took an average, which right now would be, put you around what, 86 bucks? You're looking at about an 86% chance that this will expire in the money, if you want to look at it that way. Okay? As opposed to a at the money, which would be a 50% chance. Or this out of the money way up here, you can look at that like a 6% chance. Okay? So, if you're trading at the money binaries, you got a 50-50 chance. So, all you have to do to be right and to expire in the money is to be right by one tick or one pip, right? So to trade an at the money binary, you're looking at what we'd call a 1-to-1 risk reward ratio, meaning if I wanted to buy this binary right now, I could buy it for about 50 bucks. If it expires in the money, it's worth 100. So I risked 50 to make 50, right? Pretty good risk reward ratio. But I better have something that's telling me, my system or strategy or indicators, hey, I think the market is going up, or I think the market is going down. Otherwise, you're just throwing money out there 50-50. Okay, that's not a good strategy just to throw money out there for a 50-50. Because you win 5 out of 10, where do you end up? Even, minus your fees, you're down. Okay, so you have to have something that's going to give you some type of direction there. If you want to trade an out of the money binary, okay, and you don't have to trade this $6 one. Even this one right here that's priced at 15, it's out of the money by how many ticks? Well, 78.93 is the contract. The market is at 78.88. So it's only 5 ticks out of the money. But for it to go up in value, what is required? Again, anytime you're trading out of the money binaries, movement is required. A move is required in the direction you're trading for an out of the money binary to be potentially profitable. Okay? Now, you could buy this out of the money binary right here for $18.50. If it expires in the money, it'd be worth 100 bucks. But let's say you buy it right now for $18 and the market goes up to 3 ticks. Well, it might all of a sudden be worth 40 bucks. So you might be able to buy it for 17. The market moves up a couple ticks and you sell out of it at 40. Again, you don't have to hold it till expiration. You can get into it, have the market move your favor a little bit, have it go up in value, and pull out of it with a profit. You don't have to wait till expiration. Yes, you can Yes, Dave, you can sell it early. For example, if I were to buy it right now, and guys, this is just demo for example, I'm not telling you to follow this trade. If I was to buy this right now for $14, okay, I just bought it for $14. Yes, Rob, exactly. It'd be a scalp, okay? So if I wanted to buy this for 14 bucks, okay, and let's say that the market was moving in my direction. This is just an example here. All I'd have to do is, if the, see like over here, see your P&L, right now we're down, got bid-ask spread, maybe you're up, maybe you're down. Anytime with Nadex, as long as you've got a bid and offer, as long as you've got something on the other side, you can get out of it. You can buy something for 15 bucks, it might move up to $30 and you sell out of it early, do a $15 scalp. Or you may buy something and it's moving against you, you were wrong, and you want to get out of it early so you don't take your full loss. You can do that. Okay, Dave, you're asking that question. So like right here, Dave, can you see my screen? I bought this contract, and so now I open it, I click it, it automatically fills it in as a sell because it knows I'm going the opposite direction. Okay, so I click my open contract and I place order and it sells out of it. It's done. Gone. Okay, most binary brokers don't let you do that. Most binary companies you have to hold till expiration, but with Nadex you can get in or out. Yes, Rob, on that example right there I lost 10 bucks. I was just showing an entry and exit, not necessarily a strategy or direction. We weren't looking at, you know, which way the market was going, and I don't have charts up. Just simply showing Dave there that yes, you can enter and exit an order anytime, okay, as long as there's contracts on both sides. Okay, so yeah, Kevin, it wasn't trying to show a directional trade there, just showing in and out. Let's see here. Campbell, can you see my responses? I didn't see one from you, so if you want to post it there again, I could try to take a look at that. Okay. Let's see here. I'll show you some examples on some charts here in just a little bit, Baz. We've got two different strategies I want to show you tonight, and I'll show you some of the charts we use and some of the screenshots of some of those charts. Okay. All right. So back to at the money, in the money, and out of the money. Let's see here. Can you hold that window open for an hour and hit sell and the profit showing? Gary, can you hold that window open for an hour and hit sell and the profit showing or loss showing is what you will take? Okay, I think, Gary, what you're asking is this. For example, if I were to, guys, again, this is not directional trade. This is just showing you an example of how to use the platform. If I were to buy this binary right now, okay, I've got that binary right there. All right, so I bought it for $29.50. So if it's going in my favor, maybe it moves up to 60 bucks, and I want to sell out of it right then and for a $30 profit. Maybe I don't want to hold it to expiration, or maybe it's going down against me and I want to sell out of it. So I think, Gary, what you're asking is, can you leave this open for an hour? Basically, I think Gary's asking, can I leave this open, watching the market, watching profit and what it's doing, and then hit sell? Well, you can leave this open, yes, but when you opened it, okay, what it did was it immediately filled in the price here at whatever the price was when you opened it. Okay, so the price could change as the market's moving, but this won't change. You'd have to manually change that. All right, so you can have this open and ready. You already see it's going the opposite way to get you out. Okay, it's already got your quantity filled in there, and as the price moves, okay, like see right now we have it at 25. See, it went down to 15. you might have to change it, okay? Or you could have a preset order in, you know, like for example, everything on Nadex is a limit order. You know, so you could have something like right now, if I typed in $5 that I want to sell it at $5, if I pressed place order, it's going to sell it for 5 or more, the best it can get me. Right now, it's the more is $12.50. A second ago was 11. Like the price can jump around a little bit, but you can enter just a little bit lower price and hit order, and it'll fill you at the best price at that time. So yes, you can have that window open and ready to go, but you'll just have to adjust that price or put in a limit order ready to go, and as you're watching the market move, then boom, you can just get out of it and you're done. Okay. Now you can, yes, you can set a take profit order. All right, on the Nadex platform you can set a take profit order, but you cannot set a stop loss order. What do I mean by that? If I bought this contract, again, let me just show you. If I bought this for 21 bucks, I've got it here in my open positions, right? Okay, well, bought it for 21, and let's say that if it gets to 40, I want to sell out of it. All right, well, so I can go in here and say sell it if it gets to 40, place that order. Okay, and that order is set. How do I know it's set? I can go right here to working orders, click working orders, and it's set in there to sell this one at what? 40 bucks. So that way I bought it. If the market goes up, it'll automatically get me out. I can also sit here and have it open, ready to go the other way if it goes against me. All right, so I can have it, the order's placed, I got to take profit order, and I can try to do a stop order. Okay, so all right, let's get back on track here. I can try to come back to some of these. Yeah, Wesley, that'd be nice for them to have that. So let's see here. Okay, so we understand at the money. All right, at the money is the strike price is at the market, priced around $50. An out of the money binary has to have movement in order for it to go up in value. Correct? What about in the money? Does in the money have to have movement for it to go up in value? Or let me rephrase that. Does an in the money binary have to have movement for it to expire in the money? No, it does not. So right here, Aussie dollar contract is 78.78. Currently the market is at 78.82, so it's already in the money. So what happens if the market just stopped moving right now and stayed flat till 8 o'clock? Would this contract expire in the money worth 100 bucks? Yes. So if the market stopped moving and just went flat right now, all we'd have to do is wait out our time the next 18 minutes until 8 p.m. and this would expire in the money, worth 100 bucks. What happens if the market kept going up a little bit? Would we expire in the money by 8 p.m.? Yes. So the market could stay flat. So if I get it in the money binary, the market could stay flat, or it could keep going in my direction and I still would expire in the money. What if it moved against me a little bit? What if it came down a little bit, but not all the way to my strike? Would we expire in the money? Yes. So that is the difference. Okay, I hope everybody got that concept. So I want you to, it might seem very repetitive here. I might seem like I'm going over and over again, but if you truly understand out of the money, at the money, in the money, it'll make the whole world of difference for you in binary trading. So in the money, Statement's already true. The market's already above or below, just depending on if you're buying or selling. So, in the money, the market can stay flat. I still win at expiration. The market can go up. It's still worth 100 at expiration. The market can go down against me, but as long as it doesn't go all the way to my strike, I still can expire in the money. So in the money, the market can go 3 different ways. It can go down a little, stay flat, or go up, and I'm still good. All right? At the money. What has to happen for an at the money to be profitable? It has to move in my direction and be correct, and the statement has to be true in my direction by at least 1 tick, right? Because I'm 50-50, it's got to be at least 1 tick in my favor to win and be worth $100, correct? Everybody follow that? And then out of the money, whether it's this one here or any of these up here, the market has to move in that direction. I have to have bigger movements. So in the money, I can have no move. At the money, got to have at least 1 tick in my direction at expiration. Out of the money, I have to have movement. So, if the market is, okay, does everybody understand that? In the money, out of the money, and out the money. I know there were some other questions, but I'm just asking about out of the money, at the money, in the money. Does everybody understand that concept, what they mean? Okay, perfect. So, if the market is dead flat, like you're watching a chart and it's like watching paint dry, there's nothing going on, do you want to buy an out of the money binary? Probably not, because again, you have to have movement for an out of the money binary to be profitable for you. Now, one of the biggest mistakes people make in trading binaries, I get this question all the time, Daryl gets this question all the time, okay? What is one of the biggest mistakes in binary trading? Well, there's many, but one of the biggest mistakes in any trading, whether you're trading binaries or anything, is bad risk management, okay? Over trading your account, bad risk management, not knowing when to stop, and on and on and on. Binaries, one of the biggest, Chris just said it, Donovan, you just said it, buying out of the money's too cheap. Because what do? What do some people do? They don't look at a strategy, they don't look at a system, they don't look at a chart, they don't have live data, they don't understand risk reward, they don't understand probability and profitability. All they see is, wow, I've got a couple $100 in my account, I don't want to risk too much. Man, I could buy this one right here for $8.75. But if I win, I can make it 91 bucks. Sweet. I'm going to take that one. All they see is risk and reward. All they see is it's only going to cost me $9 and I can make 91 bucks. I'll take those odds. And you know what you do? What did we say earlier? You can look at the price of a binary and kind of consider it a probability of percentage of win, right? So what does that mean? $9 would mean what? 9%? So that would mean you'd win 1 out of 10. So after you do 10 trades and you might win that one and win 91 bucks, well, you'd already spent over 90 bucks. You're even minus all your commission fees. Like, it's just, you're just pushing buttons without having a strategy behind it. Out of the monies are great to trade. We trade them all day long, and I'm going to show you how here in a minute. But you don't ever take them just because of a price or a risk reward. Okay? Now, the opposite of that is true as well. If I'm going to take an in the money binary, let's look at the opposite. Okay, well, hey, John, I hear you. I hear what you're saying. I don't want to throw away all my money, you know, $9-10 at a time on these low risk. I don't want a 9%, you know, probability. I want a 97% probability. I mean, who doesn't, right? I mean, who doesn't want a system that wins 97% of the time? Or who doesn't want a system that wins 89% of the time? That's a good system, right? Not always. Because just because this binary is in the money, it might be priced at 88.75, $89. Wow, I've got an 89% chance of this expiring in the money profitable. I'll take that all day long. Would you? What is your chart telling you? What if you buy this binary right now for $88, but you didn't look at your chart or system, and if you had, you would have seen that your charts and your strategy is telling you market's going the other way. So you've got an 88% chance right now, but what is your risk? Your risk is $88 as well, if you hold it to expiration. Now granted, you can get out of it early. Say you bought it for $88, market turns against you, maybe you get out of it at $50. Okay, so you're not taking your full loss there. I know I'm spending a lot of time on this, guys. I'm trying to explain to you how out of the money, at the money, in the money work. What are the probabilities of expiration profitable, and what are the risks? Because some of you go, I don't want to risk $83. I only got a few $100 in my account. I'd rather go and, you know, maybe I'll go in the middle. Maybe I'll risk like this one, like $31. It's a little closer. Okay, well, why are you going to do that? I'm not saying that's bad, but you got to have a reason for doing it. Okay, so let's move on. Now that you understand how these binaries work, now that you understand in the money, at the money, out of the money, if you know how they work and you understand them, then you can understand strategies and systems to trade them. Okay, what is premium? Let me just go back here again. Premium is, I'm going to explain it very simple. You can get into long, you know, explanations of premium. Very simple. Remember we talked about at the money, right at the market, worth about $50. But the ones that are up here, already in the money, the statement's already true. It's already quote unquote winning, as someone said. You're going to pay more for it because it's already in the money. That's a premium. You're paying a little more, you're risking a little more for that particular binary contract because it's already in the money. The statement's already true. Okay? That's the best way. People ask, well, what is premium? Tons of hours of explanation and examples of what premium is. For our sake tonight with binaries, that's what premium is. You're paying a little bit more, you're putting a little more money up, a little more risk, because you're getting a higher probability binary option, so you're going to pay a little bit more premium for it. Okay, makes sense how I just explained it? It's oversimplified, but that's the best, easiest way for you to look at premium. Okay. Yes, Jeff, I'll show you where you can get a recording of this. What is time decay? All right, time decay is another term you'll hear a lot with binary trading. Okay. Let's see here. Time decay would be this. If I were to buy, yes, Wesley, that's two different, yes, two different types of premium, and I'm about to get to that one here in our other strategy. If I were to buy this out of the money binary for $15, again, out of the money, what has to happen for me to profit? Market has to move, right? So if I buy this for 15 bucks and the market goes flat, what happens for the next hour and 7 minutes of time? Does this thing go up in value, or does it decay in value? Right. It's just going to decay. So that's called time decay. So where I've got an hour and 7 minutes till expiration. I bought it for 15 bucks. The market's not doing nothing. So it's not going up in value. It's just decaying in value. So that's time decay. Now, that's negative time decay. What if we were to get this one? And I bought this one for 80 bucks and the market just stayed flat. Again, buying at 80 bucks, the market, this contract's in the money. It's already true, correct? So if the market, so I buy it for 70, 80 bucks and the market just goes flat, I'm just waiting on that time to decay, and that's getting closer and closer to 100 bucks as time goes away, right? Even though the market's not moving, it's getting closer to $100 in value, because the closer to expiration, remember, at expiration is worth 0 or 100. So as the market moves, or as we get closer to expiration, the value has to start to change, right? Because the closer we are to 100, or to expiration, and to it being expiring in the money, the closer to $100 value it's going to get. Let me show you an example. Okay. Okay, here's an example. Euro dollar to be greater than 1.2540 at 3 p.m. So let's say I bought it right here. Okay, this green line is 1.2540. Okay, so I'm buying this contract. So I want the market to expire above this green line, right? So let's say I bought it right here, and when I bought in right here, I could have sold it for 54 or bought it for 58. So I bought it. Okay, and why is it priced over 50 on the buy side? Because it is in the money. It's above that price, right? Yes. So I buy it. What happens? Boom, market comes down here. So now it's out of the money. It's below the strike. So now where is it priced at? About 42, 46, right? So a little more time goes by. It's still out of the money. It's still under the strike price. So we're getting closer to 3 p.m. Now where is it priced at? 34 or 38. Why did it go from 42.46 to 34.38? Even though they're almost at the same circled price there. Time decay. We're getting closer to expiration, and it's not a true statement. It's out of the money. So the closer we get to expiration, it's becoming less valuable. Why is someone else going to want to buy that from you, or why is why is there going to be a value or a market on the other side of something that's not true, right? But then what happens? Boom, market pops up, stays right at the money there, pops up here. Okay, and then what happens? So the market pops up. Now it's worth 72 or 76, right? So now we're getting closer to expiration, and we're in the money, and it's more valuable. So right here, I've got two options. What can I do? Hey, I'm in the money. The statement's looking true. The market came up. I've only got 15 minutes to expiration. I can hold it to expiration. Well, you could, but where'd you buy it? You bought it for 58. You could sell it right now for 72 and come out with a $14 profit, right? Well, why would I want to do that? I mean, it's only a $14 profit. I want to hold it. I want to get the whole $100. You could, but what happens? Boom, market flies right back down. Now look what happens when it's out of the money, right close to expiration, what's it worth now? Oh man, now I got to sell out of it and take a $22 loss. That $14 profit was looking pretty good now, wasn't it? Well, luckily on this example, it popped back up and it expired in the money for $100. Okay, so this gives you an example of time decay. All right, how not only does movement in the price and the market affect the price and value of your binary, but also the closer you get to expiration. Let's look at another example. I bought this one to expire above 25.40. I bought it right here at 46, but the market has kind of stayed flat. So I bought it out of the money, right? Market kind of staying flat, still out of the money, getting closer to expiration. Now it's only worth 32.36. Still out of the money, we're decaying in time. Time's getting us close to expiration. Now it's only worth 18.22. Does that make time decay make a little more sense? Where it's just going down in value the closer you get to expiration, and the statement not being true. Here's the opposite. I bought it for $56. Market's flat. See, thing to keep in mind, we talked earlier about out of the money, at the money, in the money, and how out of the money you have to have movement, and here you got to have movement. But again, here's one of the things we talked about with in the monies. You don't have to have movement. It can be flat. So what happens? Bought it for 56. Market's kind of teetering here, a little time goes by, now it's up here to 68, little time goes by, now it's at 82, and boom, I expired in the money. So it's two things that affect the value of a binary, whether you're out of the money, in the money, at the money. Two things that affect it: movement of the market and time. So time decay can be negative or positive. Okay, so all other questions aside, everybody understand out of the money, at the money, in the money, and everybody understand time decay. Any questions about either one of those two things? Okay, good. All right, so 20-minute binaries. Nadex offers 20-minute binaries during the daytime on the 4 U.S. indices. Okay, you can do a couple different strategies with them. Remember, we talked about needing multiple plays in your book, and I just showed you some examples of why. Why do you need multiple plays in your book? What is this day? This is the up and down chop day, right? Market's up, then it's down, then it's up, then it's down, right? Here's a flat day. Here's a flat day. Is a trending system going to work for you on this day? Is a trending system going to work for you on this day? Different days, different market conditions are going to require different strategies. So let's talk about range bound. What is a range bound strategy? Well, this is the day when the market does not trend. You need to be able to adapt to the market conditions. There's no single strategy or system that works 100% of the time. Range bound would be an example of this right here. The market's not shooting way up and way down and way up. It's kind of just ranging right here between this range. Okay, stays in a channel, stays in a funnel, stays between two different price points, just kind of ranging. All right, so how would you trade that with binaries? Well, let's take a look here. Range bound strategies require flat markets, non-trending, and they don't require moves. Okay, so range bound strategies, you're looking for no movement. So do you want to go out of the money binaries for a range flat system? No. And you probably don't even want to do at the monies. All right, we're looking for in-the-money strategies for range-bound systems. Now, here at Apex Investing, some of the ways that we trade them, some of the indicators that we use are volume, expected ranges, deviation levels, and we always keep track of news. So what is a butterfly? Butterflies are how we trade range-bound days. It's actually going in with two separate binaries. We're doing two binaries. We're buying one and we're selling one. So we're selling an upper in the money binary and we're buying a lower in the money binary, and we're looking for it to expire between the two. That way we can make money on both of them potentially. Okay, so I'm just going to skip forward here to the chart. Alright, don't let this chart overwhelm you. Most of y'all have seen this chart before. This is a 5-minute chart, and you see these squares. Okay, everybody see these squares? That is what is called our expected range indicator. Okay, it's an apex indicator, and what it does is it calculates over time, historically, a bunch of algorithms, a bunch of stuff involved in it. What is the expected movement of the market for this particular day and time of the week? And if you notice, those are 20-minute ranges. So at the end of every 20-minute box would be the expiration time of a 20-minute binary. So that way it kind of breaks down. You know, you can look at a messy chart and wait a minute, what is this, and what's the timestamp, and what binary did I get? This breaks it down for you. All right, the end of each one of these boxes is when a binary would expire. Okay, so the box top to bottom represents the expected move of the market. For example, right here, when the market opened up for this 20-minute period, or for this 20-minute period, or anywhere at the start, the market's not normally expected to go to close higher than this or lower than this. Okay, that's the expected movement of the market. So let's look at this example right here, or let's just start on the left. This example right here. So, okay, one other quick thing here. This indicator here, and I'll show you where you can watch detailed videos of this. This expected volume. See that yellow line, guys? All right, that yellow line is also historically the expected volume for this day and time frame. The blue shading, see right here where the blue went past that yellow line, that means it had higher than expected volume. Volume exceeded our expectations. See right here where it's barely touching the line, or you've got your gaps, that means there wasn't high volume, which means we had about expected volume or lower than expected volume. We didn't have this was not a high volume day, so it's not a big move day, it's not a big trend day, it's a flat range bound day. All right, so people say, well, how do you know what system to trade? How do you know if it's a trending day? How do you know if it's a volatile day? Well, those are a couple of things that we use. Expected range. For the day so far, is the market breaking out of the expected ranges? Is it trending way up more than expected? Is there higher volume than expected? No. It's staying between the ranges, and we're not getting crazy volume. So that tells me today is a range-bound day. Does that make sense? So what could I do? Well, if, on this one right here, for example, if I know the market's not expected to go below this price, meaning the market's going to stay above this line, what would I maybe want to do? Would I maybe want to buy a binary right here? Because if I buy a binary right here and the market's already up here and we expect it to stay above this line, that would be an in the money binary, correct? So if I bought a binary around here and the market expired above here, I'd expire profitable. Correct? Everybody follow that? Okay. Now the opposite, up here, if I sold a binary up here, I'm saying I don't think the market will expire above this price. It's going to expire below this price. So I'm selling an in the money binary up here. At the same time, I'm buying an in the money binary down here, right? And as long as it expires in the middle, I would be profitable on both sides. Does that make sense? Yes, you would take this trade simultaneously. I'll show you an example. On that particular example there, let me go, you know what? I'm going to just pull this up a different way. I'm going to help make sense of this for you guys. And then we're running a little bit behind here. Okay, Aussie dollar. Back to what we were looking at before. Market is 78.78, so that means this one right here is the at the money binary, correct? Everybody follow me there? Okay. If I sold this binary right here, the 7884, if I sold it right now, I can sell it for 22 bucks. What am I saying if I sell that binary? I'm saying that the market will not expire at 78.84. It will expire below there. Is that correct? Okay. And right now that statement is true. The market is below 7884. Everybody follow me? So I'm selling an in the money binary. So if I sold this binary right now for 29 bucks and it expired in the money, I would make $29, correct? Because I'm selling it, not buying it, I'm selling it. Now, what if I also at the same time bought this one right here, 78.74? It's already in the money, correct? So as long as the market stays above there, I can buy it for 84. If it expires in the money, I'll make 16 bucks. So I can make 16 bucks on this one, and I can make 29 on that one. So I can make money on both sides. We're butterflying it. Okay? Basically, I'm selling one up here, I'm buying one down here, which both of those statements are correct. So as long as it expires in the middle, I win on both of them. Does that make sense? Okay? So, yes, it would be true for both, exactly, because they'd both be in the money. Now, if one side goes against me, I can get out of that side. I don't have to take a $83 risk or a $73 risk or whatever. Okay? So what I'm hoping to happen is this right here. Exactly what happened. Okay? See this? This was for the 4 p.m. expiration. So let's look at our chart. 4 p.m. expiration. So right here, this market opened. I sold one up here, and I bought one down here. So as long as the market didn't expire up here, and as long as it expired down here, as long as it expired in the middle, then both of these statements were correct, right? Which means I won on both of those binaries at expiration. So I bought one for $82.50. At the time of this screenshot, it was up $12.50. If I held it to expiration, I'd make what, $17.50 on that? I sold one for $19.50, which means if it expires correct, I can make $19.50. At the time of the screenshot, it was up 12 bucks. So for this binary, for this butterfly example, I could have made $19.50 here and $17.50 here, so 36 or 37 bucks. Okay? Now, somebody says, how much time do you like to give these trades? Well, I'm trading these on the examples I'm giving you here. is we trade these on the 20-minute binaries that Nadex offers. Nadex offers 20-minute binaries during the day on the 4 US indices. So these squares you're seeing, just look at the time frame here. Okay, 1500, that's 3 o'clock, 3:20, 3:40, 4 o'clock. Those are 20 minutes. All right, these are 20-minute trades. So what I'm looking at, if it's 3:20, and I'm looking to get into the expiration of 3:40. Well, what am I looking for here at 3:20? I'm looking back. Did these last few ranges break through the range? Is it a trending day? Is it a volatile day? Or is it staying pretty flat in the range? Is my volume high or low? Okay, well then things are pretty range bound and pretty flat right now. So I'm going to do a butterfly. I'm going to buy and sell. Okay. Now Wesley asks, how well do the strikes line up with the expected ranges? Some days they'll line up perfectly. Some days they won't line up perfectly. Sometimes I'm not always necessarily looking to have to get it at the bottom. I mean, you can look and see yourself here. I mean, there are times where I could have gone even closer on some of these. Okay, so it's whatever you're comfortable with the right risk-reward ratio. Okay, meaning I like this where I can make 15, 20 bucks, but I'm not going to go buy a $95 one and sell a $5 one. You know what I'm saying? I mean, there's just too much risk there. Ideally, I'd like to do buy for 75, sell for, or buy for 80, sell for 20, because, and here's why. Let me show you why. This will kind of bring it together for you here, and then we got to move on. If I can go for about $15 on each side, if I can make 15 on my buy side, 15 on my sell side, then I have a potential to make 30 bucks, correct? So what happens if I bought this one and sold another one, right? Well, if I buy this one for 87 or 85 bucks, let's just say, and let's say I was wrong. Say the market starts going one direction. Say I thought it was going to stay flat, but it starts shooting up against me or shooting down against me. Well, if I just leave this, what am I going to lose? What's my risk? 89 bucks right now, right? Okay. Now, again, I'm talking more of like let's use this example, 82. Like, I bought for 82, sold for 19. Well, say I was wrong, the market starts shooting down. If I just left this alone to expiration and it expired out of the money, I'd have lost 82.50, correct? Because it'll expire being worth zero. Well, if I'm right on both sides, I can make about 30 bucks, right? 30, 35 bucks. Do I want to risk 82 bucks to make 30 or 35? Does that seem like a good risk-reward ratio? No. Heck no. So, what happens if I'm wrong and the market just started shooting down? Let's say I bought right here for $82 and the market shot all the way down and it hit that strike price. What is my binary going to be worth if the market came down and hit my strike? Because remember, when I bought this for 82 bucks, it was in the money, right? ITM, it was an in the money binary for 82 bucks. But if the market comes down all the way to that strike price, it's not in the money anymore. It's an at the money binary, correct? And it would be worth I'm not talking about expiration, I'm talking about during the period here. If it came down and hit that, it'd be considered an at the money binary, right? So it'd be worth approximately what? 50 bucks. Remember? At the money binaries are priced around 50. So if I win on both sides here, I can profit around 35 bucks, right? The market's going against me and it comes to my strike price. This one I bought for 82 is going to be priced somewhere around 50 bucks. I can get out of it. And what would I lose? About 30 bucks, right? And then I can close this side out too. So if it goes against me, it comes down to my strike price, guys, that's our general rule for exiting a binary. If I buy an in the money binary and it's going against me, when do I exit? You exit when it hits your strike price. Because what do you always know? That whether you have 20 minutes to expiration, an hour to expiration, or a weekly, daily binary, if it's at the strike price, if the market's at the strike price, it's going to be worth approximately 50 bucks. And that's very helpful to know for risk management. So I know I can get out of this thing for about 50 bucks if it hits my strike. So I'm down 30 bucks. What did I stand to win? If I win, about 30 bucks. So again, you don't want to risk 82 to possibly make 30. You want to keep about a 1-to-1 risk ratio, and that's how you do it on a butterfly. Okay? But yes, Wes brings up a good point. If the market goes against me, this thing here is now worth 50 bucks. I lost 30 bucks there. That's because the market's going down, which would mean this one's profitable. So I made a little on this side too. Okay? So that's how you can keep a good risk-reward ratio using butterflies. Alright? Is you're looking for there to be no movement. You're looking for it to expire between the two so you can profit on both sides. But if it goes against you one way, you get out of it. You made a little on the other side, you're keeping a 1-to-1. Okay? Yes, Gary, that's correct. You would need to, these are 20 minutes. So since you can't just place a stop order on Nadex, yes, you need to watch those and manually get in and out of those. But every 20 minutes on a range-bound day, you've got the opportunities to do that. And again, I'm talking, this is one contract each. If I was doing 10 contracts each, well, then I'd have a possible potential profit of 300 bucks every 20 minutes. Okay. These indicators we use at apexinvesting.com. You can go over to Apex and check them out. I'll show you where you can get more info on that. Okay. We're running a little bit over here. Let's look at one other strategy. Okay. Yes, Jerry, it is 2 separate trades to do a butterfly. Okay. Butterfly right here, market's at 78.76. So I'm going to sell the 78.79. Now this is just an example, guys. I'm not telling you to take this trade. I'm sorry. I'm going to sell the 78.74, and I'm going to buy this one here. Okay. So I sold the 84. I bought the 74. So as long as the market expires somewhere between those 10 pips, I win on both sides. That makes sense, Jerry? The question was, is it 2 separate trades to complete a butterfly? Yes, it is. I'm buying the lower one. I'm selling the higher one. And as long as it expires in the middle by 1 tick, I'm good. Okay? So that's a butterfly. Let's move on here. I know we're running a little bit over. What about the opposite? What is a strangle? Okay, so we talked about flat days. On flat days, we want to do in the money on both sides, do a butterfly. On crazy trending days where the market's flying, we have trending systems. What about the choppy days? Okay, What do I mean by choppy? Remember up here? That's a flat range bound day, right? Everybody see that? Flat range bound day. What's that? That's chop. Everybody see that? Up, down, that's chop. Well, when the market's doing this up and down, do you want to be buying and selling deep in the money, higher risk contract? No, because you're not expecting the market to stay flat. You're seeing that the market's going crazy, right? Okay. So, Joe, do you change your strategy at the point when you lose on one side? No. You change your strategy when you see different market conditions. What do I mean by that? What is a strangle? A strangle is the exact opposite of what we just did. Let's look at this chart for a minute here. This binary right here is priced around 50 bucks, right? Strike price is 17,893. So that's at the money. So that means that's where the market currently is, correct? So let's say that it's a choppy day. Choppy meaning the market's going up, down, but man, I'm not really sure which way it's going. It's not trending. My trending system's not really telling me which way it's going. It's just going up and down, but it's going too far outside of my ranges where I don't want to do a butterfly. It's going all over the place. Well, what would happen if this binary right here that's priced at 18 bucks, if I bought that binary, the 17,914, for 18 bucks. Well, the market's right here right now. What happens if the market shoots up to 17,914? Suddenly this is the at the money binary, correct? Everybody follow that? Which means that binary would now be worth approximately how much? 50 bucks. Because wherever the market's at, whatever strike where the market's at, that's at the money, so it's worth about 50 bucks. So if I bought this one for 18 and the market came up there, now this would be worth about 50 bucks. So I'd have some profit in there, right? What about the opposite? If I sold this one down here for 86, remember the market's right here, okay? If the market came, I sold this one for 86. If the market came down here, boom, now it would now be worth 50. Now remember, I'm selling, so if I sell for 86 and I buy back at 50, there's $30 profit there, right? No, not a loss, Rob. Remember, on a sell, you're wanting it to go down. Okay? So, it's the exact opposite. Remember, the butterfly we did, we're selling up top, we're buying up low, want it to stay flat in the middle. This is the opposite, where it's in the middle right now and it's going all over the place. So if we buy a cheap one up here, sell a cheap one down here, when it pops up there, we can be profitable. When it pops down here, we can be profitable. What do I mean? This is what we call a strangle. On the butterfly, we did in the money on both sides. On a strangle, we're doing out of the money on both sides. It's low risk. We don't need stop losses. We're looking for a 1-to-1 risk-reward ratio. Okay? We are expecting a move. Remember, to do out of the monies, what do we need? Expected move. Okay? We only do out of the monies when we have a move, when we're expecting a move. We just don't know which way it's going to move. Okay? Because without a move, we're going to decay in time, and we don't want to do that. With a butterfly that we did before, we're going in the money, and we're trying to profit on both sides, correct? But now on the strangle, we're not trying to profit on both sides. We might, but we're going into it planning to only profit on one side and most likely lose on the other. Okay, it's a complete different strategy. Now, these are quick trades, they're low risk, they're great for part-time traders. We use diagnostic bars for this. Real quick, here's a 5-minute chart. What this is there's a new line on the chart every time the earth rotates 5 minutes, right? Does this tell you anything? You're like, well, it kind of went down right here, and here it's doing the... we don't use time-based charts for this strategy. We use the Apex diagnostic bars. Doesn't that give you a little more idea there what's going on? Because you see it coming down, you see it going up, down, up. You see this choppiness. Does that look like a flat day to you? No, that looks like some chop going on, right? So, for this strategy, we use some of the same indicators where we already talked about, but we use our diagnostic bars. And here's how we put them all together. You see the difference here? No, these are not Nadex charts. These are charts that we use here at Apex. Okay, I'll show you where you can get some more info on them. See the difference here on this chart compared to the charts we looked at for butterflies? First things first, do you see this kind of moving a lot more within the ranges than our other charts were, right? A lot more movement going on, not just flat. Now, look at our expected volume indicator. Remember we talked about that. This yellow line is expected volume. When the blue shades, if they stay under the line, mean it's low volume. If they're breaking these yellow lines, that means there's a lot of volatility. Remember when we looked at the butterfly? We were seeing no volume. So we're like, hey, it's flat. Here, volume, it's busy, a lot going on, it's volatile, going up and down. Okay? That is how we would look at reading the market. We talked about different days, different market conditions. These are some of the things we use to read the market. Are we coming in and out of these ranges? Are we hitting tops and bottoms? Are we got a lot of volume going on? Hey, the market's moving, it's volatile, there's volume. I just don't know which way it's going to go. I mean, look, in this 20-minute period, it went way up here, then it came way down. This 20-minute period went up, went down. Man, it's not a clear direction. So, that makes sense of if the market's right here in the middle, when the new 20-minute binary opens up, I'm not sure which way it's going to go. It might pop up here, it might pop down here. I don't know which way, so how can I possibly profit? Well, I can buy a real inexpensive one up here and sell a real inexpensive one down here, and if the market pops up, this 18 might jump up to 50 and I can get out with $30 profit. Or if it pops down here, this one might be worth 50 and I can pop out. I'm just using that as an example. Okay, so let's look at some examples here though. Right here. Alright, we're on NQ. This is the NASDAQ. So what am I seeing here? I'm seeing some volume. I'm seeing a lot of volume here. So what do? This opens up. I sell one for $86, which means $14 risk. I buy one for $15, which means $15 risk. So it's the opposite of our butterfly, guys. So this is opening up. I'm buying one up here out of the money, meaning I'm hoping the market moves up there. And I'm selling one down here out of the money because it could come down there. So what happens? Remember I said we're only looking to profit on one side of these? So at the time of this screenshot, boom, 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 market popped way up here, right? So this one that I sold for 86 was worthless. Because when I sell, I'm saying the market's going to go down. It didn't go down. So this one's worthless. So I lost my 14 bucks there, right? This one, though, I bought for $15, way up here out of the money. And the market went up there. It's now worth 70 bucks. So I profited, I'm up by 54 bucks in profit. Granted, I got to take out the 14 I lost over here, so I'm up 40 bucks. Right? But what did I risk here? My risk is only 30 bucks on both sides. So I'm seeing choppiness. I'm seeing volume. The market's moving, man, but I don't know which way it's moving. So if I'm not sure which way it's moving, do I want to go risk 86 bucks on a in the money binary? No. But I might be fine risking 30 bucks. That way I could profit either way, potentially either way it went. Okay? So there's an example for you, and that was for the 120 expiration. 140 expiration on the Russell. Same thing. See us moving up and down here. There's some movement in the market. We've got some higher than expected volume going on in here. You see that? So what did I do? Sold one for 83, so $17 risk. Bought one for 25, $25 risk. Okay? This was for the 140 expiration right here. Well, what happened? I bought up here for 25. Did the market go up there to make this one profitable at all? No. It's worth nothing because the market went down. Boom. So this one that I sold for 83 is now at $18.50. So I'm up $64 of profit there. Minus what I lost here, I'm still up 40 bucks. Okay? 220 expiration. Same thing. Market's moving around. Got a lot of volume going on at the time of the screenshot. Sold for 79, so I got $21 risk. Bought for 20, so about 20 bucks risk. This one's worthless. This one's up 52 bucks. Another 220 expiration. Same thing here. See it? Volume going crazy. Right here. 220 expiration is right here. This box. So when this market opened up, I basically risked 25 on the sell, risked 25 on the buy. Where did it go? It went down. So my buy is worth nothing. But now this one I sold, boom, I'm up almost 70 bucks. Okay? Jesse asks, how far up or down would you go for your strike, or do you look for $15 investment on both ends? Jesse, the most I do on this Strangle is 25 on each side, personally. Okay? I never risk more than 25 on each side. What I want to do is I want to get the closest I can. Okay? And when I say the closest I can, what I mean by that is, if we look at it here, if I know the market is, right here, do I want it to have to move way up here to make some money? Or I want to just be able to move like one strike to make some money? I want to make as much as I can in just the smallest move without risking more than 25 bucks. Does that make sense? So like, if the market's right here, okay, do I want to buy this one out here for 6 bucks and I have to move all the way up there? Well, when I can get this one for 8 bucks, or I can get this one for 19, and if the market moves there, then that one's going to be worth 50. You follow me? So I want to get as close as I can, but I'm going to try to keep my risk to about 15 to 20 bucks on each side, 25 at the very, very max. Okay. How many periods do you look at before you determine the market trend? I'd like to see. I like to see a couple of them, maybe 2 or 3. If I'm taking the very first opening one of the day, I don't know. I don't know what it is yet. I want to see a couple. That way I can look back at 2 or 3 and go, hey, moving. There's a lot of volume today. Bam, I'm in. So I'd like to see probably 2 of them. Okay. Robert, am I right? Sell one at 74, buy back at 1450. Yes, like on this example right here. Okay, see this right here? It says US small caps. See my strike, 220 expiration. See on the chart here? This was the 220 expiration. So this square is a 20-minute time period. So when it opened up right here at 2 o'clock, I sold for 74. Okay. And I bought, I'm sorry, I sold for 74, I bought for 25. So I've got about $25 risk on each side. Okay? So when I sell, I'm saying the market's going down. And then when I buy, I'm saying the market's going up. So this one I bought isn't worth anything because the market didn't go up. It went down. You follow me? So this one I bought is worthless. I lost the 26 bucks that I put up for that. But I made almost 70 bucks over here. So $70 profit minus this $25 loss, I'm up about 45 bucks. Okay? Let me just look here. Let me show you a couple other examples here. This was the 240 expiration, and I went on all four indices. The US 500, you see, sold for 89, so I risked about 1050. Bought for 1050, so I risked 21 bucks there. Boom, it was up 82 bucks. Risked 9 bucks, 950 on each side here, up 83. Risked 9 or 10 on each side here, up 84. Risked 17 on one side, 9 on the other, up 79. So you can see how these low risk trades can potentially profit for you when the market is moving like that. You just don't know which way it's moving. Now, biggest downfall for these, don't just take them because you see these numbers I'm showing you. Oh my goodness, $10.50 risk there, $10.50 risk there, and you made 82. Awesome. I'm just going to go in every 20 minutes and I'm just going to buy for 10 and sell for 90, and I'm just going to risk 20 bucks every 20 minutes and hope I make out. Don't do that. You have to do this when there's expected movement in the market. And how do you know that? Well, the system that we use is because you see that volatility and you see this high volume. That's the time when you want to take these kind of trades. When the market's just flat and no volume, you want to do the other trade we just talked about, which was the butterflies. Okay? Let me jump some quick questions there. I know we got to get going. Strangle's good for trading into the news. Jonathan, yeah, you can do Strangles into some news. We also do, if you are on the Apex website here, you can go over here to News Trading Calendar, and we show all the different news events, the higher impact news events coming up, and it will tell you. It will tell you exactly what to do. Some of them are just be aware. Some of them we do an iron condor using Nadex spreads. Some of them we do straddles or strangles using binaries and spreads. But yes, news can be a time you might want to use those, expecting movement. Buying back the same number of options offsets what you sold and negates any further loss. Yes, Robert, for example, what you'd want to do, these are just examples here. I'm risking 50 here. Okay. What would I want to make? If I want to keep a 1-to-1 risk-reward ratio, okay, if I sold this one for 74 and then I'm up $26 over here, that covered my loss, right? So if I close that out, I'm even. I made 26, but I lost 20. I'm even. So to keep a 1-to-1 risk-reward ratio, what do I want to do? If one side is worthless, but the other side is being profitable, I'm up 26 bucks over here. Cool, so I made that back, but I'd want to be up another 26 bucks to keep a 1-to-1 risk-reward ratio. Does that make sense? So that's how I would want to do that. Okay? Let me see here. We got one or two other questions here. Let's see here. With the 5-minute trend catcher working on some butterflies. No, Wesley, we do not use the 5-minute trend catcher for butterflies or strangles. Just simply what I'm showing you here with the expected ranges and volume. Okay? Yep, Rob. Exactly. The green is looking good. No, these that I'm showing you here are based on the 20-minute binaries. Okay. A little bit different system for the 5 there. So, okay, a couple of you guys came in a little bit later and were asking once again for me to show you where to find this. If you are on the apexinvesting.com website, which I was showing you here a few moments ago, go right here to the questions tab, trading question forum, and go right down here to Apex Webinars, newest webinar. Okay, that's where this will be recorded. I'll try to have this recording on there for you later this evening, worst case first thing in the morning, but you'll be able to review this. For those of you that we didn't really do a review of binary basics tonight because we were jumping into these strategies, right here you'll see last Monday's webinar of short-term binary strategies, the week before directional, and then the 1 week before that binaries 101, okay, where you can go through and see a full webinar on the basics of a binary. That way you can help kind of wrap all this together. Okay, let's see here. Was it excellent webinar? Yes, Wes, thank you very much. I appreciate it. Simone, thank you very much. You can check out these other webinars right here as well. If you go right here, right under recent webinars, you'll also see the Nadex binary webinars, and John, yes, right here, the Nadex platform tutorial as well that you were asking about. And it's the money. Can I close the contract? Thanks. Nope. Kevin, thank you very much as well. If you want to get some information about how to get those same charts that you were asking about there, you can check out this tab right here for more information, or right here, just you can ask in this chat box right here, and we can get you some more information about how to check out those charts, and we can get you, yes, build the chat, the Ninja trader system and the data feeds. Yep, we can show you how to get that for free as well. Okay, Ariel, you're very welcome. Very good, Mr. Brokaw. Thank you, Chris. Heard that before. All right, guys. Yep, if you have any other questions, hop over here to apexinvesting.com and check out those videos, all the free education I showed you. If you have any questions at all, you can just ask here in this chat box. And make sure to join us again next Monday night as we'll review some strategies about the 5-minute binaries. Tonight everything was about the 20 minutes, and we can review the 5 minutes next week. Rob, you're very welcome. Thank you. All right, guys, I sure appreciate it. I'll let you go. We ran over a little bit here, but had some great questions and some great examples there. So you guys have a good night. We will see you next Monday night for the Nadex application and strategy webinar. All right, you too, guys. Thank you. Have a good night.